He shoots, he scores!
Good morning, guys. I want to hop on really quickly. I just wanted to hop on and answer a question that I get a lot. I think a lot of people ask me the question of how many contracts I'm using to make these trades when they really want to know how much money I'm actually using when I'm spending on these trades. So I'm trading SPX. SPX is a much more expensive trading than SPY or QQQ, right? However, the payout is more, and that's why I'm trading it currently. You really need to get experience before you hop into this because it can be very, very aggressive in the opposite direction if you don't know what you're doing. And I think SPX is actually one of the stocks that I lost the most money on when I'm starting. Started out with negative $6,930. Broke that down over the period of the last couple of months, about 45.89, and then after this week, it puts us at 34.54. So this is a bigger dog right here. This is not one that you take lightly at all, and I never take this lightly when I'm trading SPX. So let me tell you what I'm doing here, right? I'm trying to find a decent move, and you notice that I always watch SPX on the 1 minute time frame. If you watch this on the 15 minute and try to trade this on a higher time frame, sometimes you can get burned really badly. So I watch this minute to minute, and I want to see every single minute play out because these are 1, 2, 3, 4, 5 minute plays, 1, 2, 3, 4, 5 minute plays, 1, 2 play, 2 minute play, 3 minute play, 2 minute play, and so like so on and so forth. These plays don't run as long as some of the other SPY and QQQ do. These plays run fast and furious, so you really want to get comfortable first. But my play today was this right here at 10:02. This is a $400 trade, right? I hop in at $400. I get 1 minute, 2 minute, 3 minute, 4 minute, 5 minutes. I get $250 out of that trade. So just over half of the amount of contracts. However, if you flip that on its head, this was a more expensive contract right here that I bought for $300, and I get 1, 2, 3, 4, 5, and this gives me $200 in a larger move. But the pullback was more aggressive, right? So the pullback costs you more. So let's go on over to our products, and I'll show you exactly what I'm looking at when I go to buy. So me in particular, I want to buy something that's already moving, that's showing me that signs of life, right? So I'm looking at this 40 cent, this 47.55 right here. You see how that went down to 35 cent? That's a $35 contract, right? I would buy anywhere between 5 and 10 of those. And then I'm looking for it to push up to this, to become this right here. So since we're up in the premium right now, we're falling down a little bit, but we were up in the premium at 47.93 before. I'd be looking at this 35 cent contract right here to move up to 70 cents. So you're looking at a 40 cent move or a 35 cent move, right? That's $350 if you have 10 of those. And then if you divide that in half, that's basically $175. And that's how I'm looking at it. I'm not looking at it like, oh, I'm buying 10 contracts just to buy 10 contracts. For me in particular, I'm trying to get up here. I'm trying to get as close to the $1 as possible. So I'd be looking at this 65 cent right here and playing that move to become the $1 and then the 140. You see how big of a gap that is when you look at that 60 cent to right here versus the 30 cent to the 65 cent right here. But it's all relevant because the closer you can get to your strike price in SPX, the faster it's going to grow for you. So a lot of times you'll see us going down through the premium, and I'll go over to the actual chart so you can see it. So this up here is considered the premium, the highest price that you're paying for calls, right? So I'm playing puts. That's why I'm playing puts. We're at the high of the day. I'm playing puts to the downside. Boom, boom, boom. About halfway, you're not really going to see much of a move, right? But once we broke this 9 EMA, this right here is what really made the move. This got me about $50 to $75. This took me over $200. Sell in the pullback. It's because you went halfway. I'm going to put a halfway line right here, and you'll see that we'll hit that zone a bunch of times or whatever. You went halfway, boom, come up to it, come up to it, come up to it. So I'm used to us coming up to it and breaking. So once we broke it, I knew we would fall harder. And then I'm used to stopping right here as a level of support, right? But what I'm really doing is not so much going, hey, I want to get 10 contracts or 20 contracts and trying to count my money that way. I don't even look at deltas anymore. I just play whatever the move is in the market at the time. And then I have enough contracts to know that I'm going at least dollar for dollar, right? So premium stops right here and becomes discount. When you get into the discount on a put, your trade grows immensely, and that's what I'm looking for. I'm looking to get in as close to the dollar as I can, $1, and then riding that trade down. So when we do get into my area right here, I'm getting a lot more money. If I was looking for calls, I would get calls from the bottom down here, right? And then that is the discount area. So calls are cheaper and the puts are much more expensive then, right? So then I'd push up, come over here, and then boom, now you're heading into the premium area. So now the price of your call is going to jump massively. You could actually sit up here and ride out this consolidation period if you think you can. But a lot of times if it comes back below there, you're just going to sell out because you're going to see your money dip a lot. And then say you got in right here, right at the split, right? Boom. Push up into the premium of the area for the hour, and now you're riding good. So now I'm sitting at the premium again, and here goes my first trade right here, right? I waited, I let the consolidation happen, I look at the push up, and then at 10:02, hop into the premium zone. This isn't the highest amount that I could have made, but it's all good. It pushed down, and it still made me, because I spent $400 on this, it still made me a lot of money. Another thing is, I'm growing this account aggressively. You don't have to do that. You can play defense, you can play slow grow, right? Let's go on over to the all products one more time, and I can show you, like, you can get this 15 cent that just goes to 20 cent. That's $15. This is $20. This is $25. You can get these smaller contracts, and as long as it's moving in your favor, you're going to see some decent price action. This will go to 30 cent, 27 cent. So either way, you're making $3, $5, $10. It's all about building your account so that you can get to the point where you can play more aggressively. But more than anything, it's about protecting your money. I don't play just to be like, I'm going 10 contracts, I'm going all in. This ain't Vegas for me. I'm not like, bet it all and then I'm going back. What I'm doing is I'm very carefully monitoring the chart to see a play happen. When I see a play happen, then I'll play it more aggressively if I'm confident in it. If I'm not confident in it and I think I'm going to get consolidated, I won't play aggressive. I'll scale back my contracts by about half. I hope that explains a lot. I'm going to go right into the breakdown of the next video right here. You guys have a great day. If this is where you stop, you can go ahead and cut out here. But now I'm going to break down the actual trades. Have a good day.